I will show you exactly how I do stock research. So whenever I do research for a stock, the first thing that I look at is the stock price. So what is the price of one share of that company at the moment? I also look at the 52-week price range, the highs and lows of the same company. Then I look at the trading volume, and that is the amount of shares that are being traded during a specific period of time. Next is the EPS, or the earnings per share. This can be defined as the company's net earnings or losses attributed to common shares per diluted share base. This includes all of the convertible securities, debt, options, and warrants. Next thing I look at is the PE ratio. Now this is the price to earning ratio, which is calculated by taking the latest closing price and dividing it by the most recent earnings per share number. Now this shows how much a company's future growth has been baked into its current price. The next thing I look at is the EBITDA. Now this is the earnings before interest, tax, depreciation, and amortization. EPS, or earnings per share, is calculated as a company's profit divided by the outstanding shares of its common stock. The resulting number serves as an indicator of a company's profitability. A higher EPS generally indicates a greater value because investors will pay more for a company's shares if they think the company has higher profits relative to its share price. So when it comes to the PE ratio, it is calculated by taking the latest closing price and dividing it by the most recent earnings per share number. The PE ratio is a simple way to assess whether a stock is overvalued or undervalued, and it is the most widely used valuation measure. So how do we calculate the PE ratio? A simple example would be if a stock has a share price of $11.2 and its most recent EPS is 2.88, we divide the share price with the EPS, giving us the PE ratio. In this example, our PE ratio is 3.83. Now, there is no specific number that indicates the expensiveness of a company, but typically stocks with a PE ratio below 15 are considered to be very cheap, while a stock that has a PE ratio of higher than 20 is thought to be pretty expensive. But there are a lot of other things that need to be considered, as this is a general indicator. The next thing I look into is the EBITDA. This is the earnings before interest, taxes, depreciation, and amortization. EBITDA focuses on the financial outcome of operating decisions by eliminating the impact of non-operating management decisions such as tax rates, interest expenses, and significant tangible assets. This measure gives us a figure that is clearly reflecting upon the operating profitability of a business, and that is why EBITDA is often preferred to the other metrics when deciding which business is more attractive, and that is why EBITDA is preferred over other metrics in most cases. Let's have a look at how I do stock research in a live example. I will look into Google or its parent company called as Alphabet. If you are getting value from this video, I would really appreciate if you hit the like button and consider subscribing. I use a website called Macro Trends to have a look at all of these aspects to research a stock. So the first thing we will look into is the stock price at the moment. Now Google or Alphabet is trading at 111 euros at market closing. The all-time high for the last 52 week is $152 and the 52-week low is 102. So this stock is trading near its 52-week low at the moment. If we look at the 2 years performance, 5 years, it has seen a lot of growth in the past couple of years. As we can see, in 2015, this stock saw a growth of 44%, then 1%, then 35%, and in 2020, it saw 31.03% growth, and in 2021, there was an annual change of 65.17%. which is absolutely huge. Now in 2022, we see that there is a drop of 23.07%. This is not because of the company fundamentals changing, it's because of the macro situation in the market at the moment. Next, we'll go into the profit revenue and see the revenue that it is generating at the moment. So we can see the quarterly growth for Google is growing steadily, and just 2 quarters are showing negative growth. Apart from that, everything is in green. Next, we will have a look at the EPS. So the quarter ending in June 30th, 2022, it was 1.21, which is an 11.03% decline year over year. However, in the last 12 months, it has been 5.38, which is an increase of 16.76%. Next, we can have a look at the Abita, and it has been growing steadily in the past couple of years. Everything is on the up and up. And the final thing that we're going to look at is the price ratios, or more specifically to the PE ratio. At the moment, Google or Alphabet is trading at 20.7, which is near the expensive range. But as I said, the PE ratio is not just the only factor that we look into. There are many factors. That being said, if you just purely look at the PE ratio, Google is just touching the more expensive side of a company. I have individual videos on almost every topic that I've discussed today. In this video, I share exactly how I would start investing if I had to start from zero. So thanks for watching Black Vision, and I'll see you in this video.